straight off to Mr. Rajiv Batra, Chief Financial Officer with Cummins, who joins us from Pune. Rajiv, morning. Thank you for joining us. Rajiv, the good news here is that for the quarter gone by, Cummins has managed to expand the operating profit margins to 15%, which is largely because of exports. But my follow-up question is that what are you doing to expand your margins, and how soon can you go back to your peak margins, which were 19% about 3 quarters ago?
Well, I think this quarter we've been very fortunate as far as margins are concerned, and that is because we've had some major movements in foreign exchange which have added to the profitability of exports. Given the fact that the rupee has again started to appreciate, that will probably be more like a one-timer. And then we had some very good cost control and actions to take cost out of the product, which yielded very good results. So some part of our margin will stay and some part of our margin will not come back.
Chief, hi, morning. What about the domestic sales? Because they've disappointed with a decline of about almost 9% on a year-on-year basis. And you've indicated that new order intake also has begun. Where is this demand coming from? And what do you see on the domestic sales till the end of the year?
Yes, I think the power gen segment had impacted us the most because we had experienced softness in the power gen side. Over the last 2 quarters is, I think, largely behind us. And in November, December and continuing into January, we find that the sales have started to come back. So we're very hopeful that the power generating sales, which were slow, have strongly pulled back. And if this momentum continues, we should see Cummins India come back to about a 10-15% growth levels.
Rajiv, what is the update on the Paltan plant, and how much capex has already gone over there, and by when will the plant will get commissioned?
Well, all our investments, substantially all our investments, are all going to be at Paltan. And we are not going to be expanding in any other site because that is really, Paltan is a Cummins mega site. And I do look at investments ranging between about 200 crores every year for at least the next 2 years at Paltan, at Cummins India. And on top of that, we are putting together an administrative office, which is really our corporate office within Pune. Plus, we are putting together a tech center, which will advantage India plus the world. So if you add up all of that, I would see our capital spend ranging anywhere between 300 crores, possibly upwards, over the next 3 years, each year.
And how do you see growth from the industrial side of business? And with increasing competition, will margins be compromised?
Yeah, I think you're asking a couple of questions all rolled up into one, so I'll take them one by one. The first question which you're talking about is the beneficial impact of government cuts on CRR. And in the past we've experienced whenever the government has put back money into the system, the beneficial impact takes about, to work itself out, takes about 1 to 2 quarters. So we should start to see that, and potentially the power gen revival that we saw in demand over the last 3 months actually constitutes some of that. And as more CRR cuts are released into the system, we believe the demand will be even more strongly. The second question you asked me is competition becoming aggressive, and what would be our reaction to that? And earlier on, I did cover that it's business as usual for us. We respect competition, and we will position our products at market. And whenever possible, based on whatever commodity escalations happen, we either recover that through value engineering, cost reductions, or from the market. So we are always indexed as a reality check to what the market has to offer.